Lisa Long.
I'm Giannieri.
And I'm Olivia Pallavicini. And today we'll be budgeting for a single product. Our product is water bottles, and we'll be selling them at a soccer concession stand on the weekends. And today we're going to be showing you how we budget our products.
Question number 1. Describe your product. What is your cost of this product? What size and quantity will you purchase? At what price will you sell your repackaged product? Make projections of your sales in units in each of the upcoming 3 months.
Our product is Nestle Spring Water. We get packs of 24 from Sam's Club for $6.98. So for the months of May, June, and July, we are selling a total of 120 water bottles, 20 in May, 40 in June, and 60 in July. We are selling the water bottles for $2 a water bottle, so we'll make a profit of $48 for each selling price. And the total sales revenue for May will be $960, June $1,920, July $2,880, and there will be a total of $5,760. And since we only accept cash sales and no credit sales, the total cash sales will also be $5,760, and total revenues will be $5,760.
Okay, so this is our direct materials budget for the months of May, June, and July. In the month of May, we're going to be needing 480 units, which is 42 cases of water times 24 water bottles in each case. Each water bottle weighs 1.05 pounds, so 480 units times 1.05 pounds is 504 pounds. Since we're going to be wanting to keep 10% of inventory on hand for next month, we have 71 units here, and then we add the two together and we get 575. Each unit costs 29 cents, so we get a total cost of $166.70 for the month of May. We do the same thing for June, and we have 940 units because we're going to be selling more cases of water bottles, which comes out to 987 units plus the inventory that we would like to keep on hand, so we get 1,087 units minus the 71 that we had from last month, and then we multiply this by the 29 cents and we get $294.60 for the month of June. Same thing goes for July, and we end up with a total direct materials cost of $434.10. So for the total of the entire summer, we're going to be using 2,860 units, and multiply that by the 1.05 pounds for each one, and we get 3,003 pounds of direct material. Then we add in the beginning inventory for next month. We expect to sell 50 cases of water in August, so that's where this comes in, and then that gives us 3,258 cases that we're going to be needing altogether. Subtract the 171 of beginning inventory, and we get 3,088. If we multiply this by 29 cents, we get a direct material total cost of $895.40. So for our direct labor budget for the months of May, June, and July, we are going to be basing it on selling 125 units. So we figure that it'll take us about a half an hour each month to purchase and repackage our materials. So we divide the 125 cases by which is a half for each month. So for May we get 0.096, and then we multiply this by the $8 an hour that we expect to pay our employees. We expect a variable labor cost of 77 cents in May, $1.34 in June, and $1.89 in July. This gives us a direct labor total cost of $4 for May, June, and July. So since we're going to be set up for 5 hours each day selling water bottles, and we're going to be doing this 4 weekends out of the month, we get a total of 40 hours per month of direct labor. So we multiply this by 8, which is the minimum wage in California, which we expect to pay our employees. We get $320 in total direct labor costs that are fixed. So if we add this to the variable labor costs for May, we get $320.77. We get $321.34 for June and $321.89 for July. So if we add our total direct labor costs, both variable and fixed, we get a total of $964 in direct.
Think about any other expenses you are likely to have, i.e. booth rental at a flea market or vendor license. Prepare the operating expenses budget for each of the upcoming 3 months.
So we decided that our startup costs would start with $45 with a bucket, and for the first month of May, gas expense will be $5, and for total variable operating expenses to start up will be $50. We decided that in the month of June, gas expense will be $10 since we will be selling more water bottles, we will be running around more, and gas expenses are going up. Also, in the month of July, it went up by $5 as well, so that'll be a total of $15. So the bucket, 45 plus gas expense for total, 30, and variable operating will be $75 in total. For fixed operating expenses, we decided that we would have a deal with the venue that we would pay $35 a month, and this is a fixed cost, and it will equal out to $105 in total. We will be buying more ice each month because the more waters we buy, the more ice we want to keep them cold. So the first month of May, we decided that we would spend $50 on ice, the month of June $100, the month of July $150, for a grand total of $300 in ice. This is a total of fixed operating expenses. The booth rental plus the ice will be $85 for the month of May, $135 for the month of June, $185 for the month of July, and in total $405 for fixed operating expenses. So now what we're going to do is add the variable operating expenses plus the fixed operating expenses to get a grand total of $480. And all of this down here is just the months added up. This is our budgeted income statement for the months May, June, and July. We had total sales of $5,760. We got that from the sales budget. What we're going to do is subtract the cost of goods sold that we got, which is $895.40 from the direct materials budget. It gives us a gross profit of $4,864.60. Now what we're going to do is subtract operating expenses, which is $480. And we got that from the operating expenses budget, less direct labor costs, which is $964, which we got from the direct labor budget, and gives us a total of operating income of $3,424.60. We don't have any interest expense or any income tax expense, so our net income comes out to be $3,424.60 for the months of May, June, and July.